All right. Thank you very much. I'm really, really happy that you are tuning in to this channel. As you know, my name is Jeremiah Kendagor. I'm in the space of trading, and more specifically in cryptocurrency, where I have actually found a tool, and I want to describe to you right now, as I've mentioned in earlier videos. This tool guarantees you two outcomes. You either win or you definitely will not lose your funds. You will definitely not blow your account. Now, that is an utopian scenario for any trader. So, yes, without further ado, I want to welcome you to watch keenly what I'm going to demonstrate right now, how you can execute your trades with precision, just like any pro trader. So karibuni sana, welcome. Let's get into this discussion. And I will be, of course, as I've mentioned, focusing mainly on cryptocurrency. And there are various reasons why one probably may need to consider as a trader, if you don't want to be losing your money every now and then by blowing accounts and so on and so forth, you can concentrate on actually cryptocurrency. And I'll tell you a number of reasons why that is the case. One of the reasons is the first thing that I'll deal with, and that is what we are referring to as the cryptocurrency bull run that is going to happen shortly. Shortly in this space, everybody is predicting this particular phenomenal going to happen shortly. So, without let me just explain what I'm going to cover within this particular video. All right. In fact, let me push this out of the way so that you can see what I'm going to talk about. So, first of all, I'm going to talk about the cryptocurrency bull run. All right. Let me make this one a little bit smaller. All right. Then I'll talk about the markets that you can trade in this particular space. All right. Then we have what we call, of course, the concepts that are informing this particular tool, how it works, grid trading. I'll talk about dollar cost averaging. I'll talk a very powerful aspect called sub-bin mode, and then the flexibility of this tool to create different templates that meet different outcomes that you have. Then I'll talk about the cost, and then I'll talk about affiliate program that is available in this particular space. So let me therefore begin by talking first of all about this much talked about cryptocurrency bull run. And this is the reason why probably you may want to consider among the things that you trade as a trader to actually focus on cryptocurrency. And the basic reason is there is going to be a bull run, and that is informed by the halving of Bitcoin mining that happens every 4 years. So that next 4 year, the fourth one actually is happening in April next year, so it's very close. And already the market is warming up towards that particular culmination of that event. If you actually look at the previous events, if history is anything to inform us, the first time, and you can see that the first time this happened, let me actually get the pen, all right? The first time this happened, let me just get that. The first time this happened, all right, the BTC, Bitcoin, all right, went all the way to $1,000 a piece, all right. The second time it happened, the BTC went to 20,000. The third time it went to $68,000. And right now, people are expecting that the shoot up will probably go to as much as $250,000. Now, I am not a predictor. I don't follow. I don't know whether these people will be right or wrong. Time will tell. Whether we will even actually have a bull run, time will tell. But yes, would you rather be on the sideline when it happens, or would you rather be there and see for yourself what is going to happen in that particular space? So yes, these are what is informing what we are discussing as the Bitcoin bull run that will inform what will happen generally. And just before I leave this particular topic, it's good to also note let you know that Bitcoin controls 40% of the crypto space, all right, of the cryptocurrency space, meaning that anything that happens to Bitcoin or how Bitcoin performs in the market informs what every other coin or every other cryptocurrency within the cryptocurrency space will do or will perform. And so that is important for you to know so that your eyes should always be on what is happening to Bitcoin and the many things that are happening within that particular space and so on. And everything is informing us that this bull run that is expected to happen will most probably happen. Now, let me come now zero in on the trading market of the cryptocurrency space. Probably if you are a forex trader trading with MT4s and many of these brokers, online forex brokerage firms, you probably have noticed that in their platforms, probably there is Bitcoin, all right? But that is traded in that market slightly differently. So now I want to show you exactly where people trade cryptocurrencies. Cryptocurrencies are traded in exchanges, all right? In exchanges. All right, and there are many exchanges that are out there, all right? Of course, led by Binance is the largest one, all right? Followed by many others. There is Huobi, OKEX, Kraken, etc., Bybit. There are many exchanges that you can trade with in these particular spaces. So whichever exchange that you want to trade in, you can trade in this particular market. Now, I want to zero in on exactly how these markets are structured for you to trade. And I want to inform you, of course, probably you already know, that there are three main markets that you can trade in this particular space. One, you can trade what the market that is famously referred to as a margin, okay? Then there is one called futures. Then there is one called spot market. All right. Now, what I want to to let us know, and let me just wrap this a little bit here so that I can put some things here. Okay. These two markets, the margin and the futures market, have some similarities to these particular two markets, and that is they are leveraged markets. I may not do the full definition of what a leveraged market is. Basically, you are using borrowed money to trade. And what that means is that the money that you put in as your deposit is a guarantee to the broker or to the platform that you are going to sustain the trades you are going to do. So when you make money, no problem, everybody is happy, they will credit you the money. The challenge is when you have a bad trade and you are in a losing trade. Now, the losses that you will incur will be debited directly to your deposit. What does that also mean? It means that if you get into a bad trade, you stand the likelihood of losing not only the trade itself, but the whole of your account. So this therefore informs why this is a high risk environment, just like Forex. This is exactly like Forex. In fact, let me get a red pen here. All right, this is just like Forex. all right? And so the risks are extremely very high. The risks are extremely very high when it comes to these two markets, margin and futures. Are they good markets? Yes, you can make lots of money, but you need to be an experienced trader who knows exactly how to trade, and therefore you can take advantage of this particular two markets. Now, one of the before I leave this particular space, let me just talk about some of the few advantages of these two markets, the margin and the futures, is that you are able to trade the market in both directions. When the market is going up, you can trade it, and when the market is coming down, all right, you can trade it, all right, when the market is coming down. So you can actually do two things. You can buy, let me put green, you can buy when the market is going up, and you can sell when the market is coming down, all right? So that is possible when it comes to margin and futures market. Now let's turn to the spot market. Now the spot market on the other hand is not leveraged. You actually use your funds to buy a coin, all right? You buy a specific coin, whether you are buying Ethereum, whether you are buying Solana, whether you are buying Bitcoin, or whatever it is that you buy, all right? And you will hold that coin in your wallet until probably the price goes up, and then you sell it at a profit. Now, that is what spot market does. So what does that also mean? It means you can only benefit when the market is only going in one direction, when it's going up. You cannot sell to begin with, all right? You cannot start by selling. You always start by buying first a coin, wait for it to go up. So the disadvantage with spot market, yes, is that you can only benefit when the market is going in one direction. But be as it may, we know that the markets are going up because of the bull run that we have talked about, and most likely we will experience that in the near future. So again, that is, but what is important here and what I want to emphasize with this is that it is extremely low risk environment. Low risk environment. And in fact, one of my main point that I want to share with this is that if you concentrate on this market, all right, if you concentrate on this market of spot market, you don't risk losing your money. You cannot blow your account, because the worst case scenario is that you will be holding a coin whose value is low. All right? And for as long as you don't sell it, you will not consolidate a loss on that particular trade. Meaning that you only need to wait a matter of waiting for a short time, and it will get into profit and you will make money. But if you use the tool that I'm going to describe shortly, you will actually see how this particular tool is so powerful. So let me just describe. Let me just re-emphasize that point again. So in the spot market, you actually start by buying. All right. So if you buy, say, Ethereum, so now you have Ethereum in your wallet. All right. And as long as you don't sell it, all right, at a low price, you wait for it for the market to go up, you make money. So the only thing that you need to do here is, like every trading, you need to wait, all right, until the price goes to your profit target that you are looking at, and then you are able now to sell, okay, and realize your profit. Now, the worst case scenario is that the market remains low. All right, the market remains low. So what does that mean? You will not blow your account because you actually have the Ethereum with you. All right, so whatever coin that you buy in the spot market, you always have that coin, actual coins that you have in your wallet. Now, that is the very important thing to notice, and especially if you are going to, if you are new, all right, and even if you are a professional in trading, you might want that, you might want to look at a market like this if you are not somebody into high risk environment. Yes, in the futures market, in the margin market, you can make quick earnings, quick returns. Unfortunately, the risks are very high. So that even if you are making money, you always stand the risk of losing even what you have made and even the whole of your account. So that's one thing that is very important to note. So let's go to the next concept now about how this particular tool that I'm going to show you is going to revolutionize how we trade. And of course, you know the tool that I'm talking about, it is Royal Q. All right, Royal Q. This is a very amazing tool that I actually came across just a few days back. I think maybe a month or so. All right, today is the 25th of November, 2023. All right, so I just came across it a few months. I don't know why I always ignored this particular tool, but it is quite amazing. It has revolutionized how I trade, and now I don't make losing trades. All my trades are in the profit, and I make money with each one of them. And using this particular tool, you can manipulate this whatever you are trading in. So let me describe exactly how Royal Q trades, and I'll describe three concepts. All right, there is the grid. All right, then there is the dollar cost average, then there is the sub-bin mode. All right, so those are the three principles that this particular tool uses, and it is such a flexible tool. It's better than a robot in the sense of a robot, is better than an AI in the sense of what an AI is, and so on and so forth. So let me now describe how the grid plan actually works. Now, grid trading has been used time immemorial by traders all over the world. All right, it is one of the concepts of trading that is so powerful, and many traders actually use this particular tool to trade. And basically, in a grid, you subdivide the market into grids. All right, you can use a standard percentages, whatever it is that you use, and so on and so forth. So you subdivide the market into standard grids. All right, depending on how whether you are using pips, whether you are using percentages, and so on, you subdivide the market. And all of us know that the market keeps on moving in zigzag. All right, it goes up, it comes down, it goes up, it comes down, and it crisscrosses these particular grids. And there are several ways now you can be able to trade this particular market. You can decide and put an average. Say if you are trading in forex, all right, you can put an average here and say at this level, anything above I sell, anything below I buy, and that happens in forex. All right. So every time the grid crosses over this particular average line, if you have been able to study it, you sell it. You sell the market. All right. So you keep on selling on these particular grids. When they come below the grids, you buy. All right. So you buy anything that happens down here. All right, so that's one way in which you can actually use this particular strategy. But the one that I want to show you is not even this one. Is where now you are trading in the spot market. Now in the spot market, realize that you can only buy, you cannot sell. All right, so that means you look at the market, study how it is, and probably you would be timing to be buying at these particular low levels. But let's assume a scenario where you did not have the comfort of, let's assume that the market was here, all right? And so you did not know this side here. You did not know that the market would come and do what it's gonna do this side here. So you are right here and you want to take advantage of the market, and you probably think that the market will go up, all right? Many traders, you analyze this and you realize the market is going up, and so you want to take advantage of the market here. So probably you buy at that particular point, all right? And you are targeting maybe 3% of this particular trade. Unfortunately, like the markets normally happen, the market turns and goes down. Now, according to this particular strategy, you continue to buy at every grid. At every grid level, you continue to buy. All right. So you continue to buy more, to buy more, to buy more as the market is coming down. Now, this also does something else, and I'll talk about it, the dollar cost averaging. But right now, I'm just talking about the grid. Now, what happens to you when you decide to continue to buy? And the moment the market begins to turn and go up, you now start selling what you bought earlier. So whatever you bought, say here, you now sell it here because now it's in profit in the next grid. When it reaches the next grid, you buy, you sell. All right, so you sell here. Here you had bought what you bought here. Again, you sell here. Okay, what you bought here, now you are going to sell at this grid level. All right, what you bought here, now you sell here, and you are in the profit. You've made money. Of course, the intervening period here between when you are buying and when you are selling is when you are waiting, all right, for the market to move to where you are going. So basically, this is what grid trading is, and you can apply different strategies to this particular grid depending on how you want to trade. So the next thing I want to describe now is the dollar cost averaging. All right, I want to describe the dollar cost averaging. Dollar cost averaging. All right, this is what we call dollar cost averaging. Oh, sorry. Okay, let me get that out. Dollar cost averaging. All right. So I just want to describe this. It's a very simple concept. Again, if you understand it, so the market is going up, it comes down and then goes up. So what I want to show you is that if you, for example, buy at this point and the market comes down to this point, all right, and you buy more at this point. So here, let's assume for our illustration purpose, at this point, the cost of that particular coin you are going to buy, let's assume for illustration purpose, $10. So it was costing $10 to buy that coin, all right? So this is $10 a coin, all right? Let me, my writing is a little bit whatever, let me put it better, all right? So that is the $10. And let's assume for illustration purpose, you spend $100 to buy that coin, all right? So, so now how many coins will you have? So you have spent $100 and you are buying a coin that is what, $10. Now you have 10 coins. 10 cryptocurrencies of that, 10 coins of that particular cryptocurrency that you are buying at $10 a piece, and you have spent $100. Now let's assume that there is a drop in the market. So the market drops, all right? You bought, but now the market has gone against you. It's gone down, and the price now is $5. All right? So now the cost has come down. Now it is $5 for your coin. So you are at a loss, all right? Ideally, you are at some loss. But since you are not selling your coin, you are not going to sell your coin at this point, you want to buy more. Now, there is a concept by somebody called Martingale. Okay, Martingale. And Martingale basically was a mathematician, and he analyzed how people are buying and selling in the stock markets, shares, and so on. And he came up with an idea and said, when the market comes down, for you to benefit, you buy more, and this time buy twice as much as you had bought before. All right, so instead of now buying more for $100, spend twice as much as you spent before. Spend $200 and buy more shares. Now you have more shares that you have bought at a cheaper price. Now, the magic that one going to do for you is what I want to show you right now. So how many coins now do you have? So you have spent $200 and the coin is only costing $5. So when you divide 200 by 5, you will have been able to acquire 14 new coins. All right. So now you have 40 new coins. So the total number of coins now you have is 50 coins. All right, so you have 50 coins now that are to your name, and you can deal with this one now. All right, now how much did you spend to buy those 50 coins in total? You have actually spent $300 in total. So what is your holding cost? Your holding cost is basically how much you have spent divided by how many coins you have. So if you divide 300 by 50, you will get $6. Now that is the miracle that has just happened. So now your holding cost is actually $6 right here. So you don't need the market, if you are targeting, say, to reach this level to acquire 3%, now you don't need the market to reach here. You only need the market to overshoot $6 to maybe somewhere here, and you get your 3%. All right, and you will be able to get out of the market. So can you imagine now how much you have saved yourself? You don't need to wait for the market to go all the way up in order for you to get your profit. You have actually brought down your profit target level much closer to where the market is at the moment. Now that is the miracle that you are actually using the dollar cost average to do for you, to bring down the costing, the holding cost of your portfolio to as close as possible to where the market is, so that anytime the market just turns on the positive, you are able to get out of the market with the profit that you are targeting much quicker, with no additional losses. In fact, if you look at one of what has happened here, now you are not only going to get 3% of a smaller amount, $10. You are going to 10 coins. You are going to get 3% of 50 coins. Now, if you can understand that now here you are going to, this 3% is 3% of a larger portfolio, and you are going to make more money. Now, that is how this particular dollar cost averaging concept is able to make you make more profitable trades than before. Now, let me go to the most powerful aspect, and this is unique. This is unique for Royal Q. All right, Royal Q has actually introduced this powerful concept called sub-bin mode. Now, sub-bin mode basically states that, all right, let me get again. So the market is going like that, all right, and you are targeting to do this. So you buy at this point, the initial purchase that you make, then the Royal Q allows you to buy up to 4 times. 1, 2, 3, 4. All right. And these 4 purchases are put in one bin. All right. It is collectively, they will be collectively sold together as one block. So if you get into a market, all right, that goes against you, you can buy even up to 4 times. As it comes down, you continue buying. As it comes down, you continue buying. And you have done 2 things. One, you will have brought the dollar cost average down, so that now you no longer need to target way up here to get your profit. You only need to target a small distance here. All right. So the moment the market just turns, the moment the market just turns a little bit here, all right, and reaches this level, you are able to get out of the market quickly, faster with your profit. All right. That is the power of this particular whatever. So this is the first bin. So the first 5 entries, the initial one that you entered, and 4 additional purchases that you make, you put them in one bin. And again, you are the one who sets the distance between every next purchase. It's in full control of you are in full control of how to be able to set that. Now, when the market therefore turns and gets into profit, you are able to sell all the 4 together as one block, and you make your money. Unfortunately, of course, in markets, we don't control the markets. So you have made your 4 additional purchases, and the market is still going down, and we don't know how far down it will go. All right. Now, this is where the power of this particular Royal Q tool comes into play. It allows you to enter additional purchases, single purchases. All right. And you can do as many as 100 different additional purchases. Now, these new purchases is what we are referring to as sub-bin. Sub-bins. They are small bins that we are now engaging in. And these sub-bins are handled separately, meaning that this particular entry, the moment it goes into its own profit level, it is exited with a profit. This one here will be exited independently of the original 5 entries. So the original 5 entries, all right, are kept separately, and now you are trading these new entries separately. Each one of them, each singly, is being handled by the system, can be handled by the system separately, and it gives you to tiny profits. All right, because remember again, the market doesn't go in a straight line. All right, the market doesn't go down in a straight line. It normally goes like this. So we are saying that these particular profit targets for the new entries that you are entering is giving you profits, and so on and so on. And you can enter as many as 100 of them. Now, that is the power of this particular tool. So when you understand that concept and you know how to manipulate this particular tool, you can always guarantee yourself a win. It doesn't matter what the market does. All right? And that speaks to what I said originally. Now, there is something else that I really want to explain here right now. These profits that you are making here, all right? These 2 profits here can be handled in 3 different ways. 3 different ways. Okay? And let me now explain this one. This is now where the real situation comes in. So, number 1, you can decide to actualize that profit. So that profit, you actually can take that profit and do whatever you want to do with the profit. You take the money, do and consolidate it, withdraw it, and go eat it. Whatever it is that you do, that's your money. You've made the money and you've taken profit. But remember, as you are taking this profit, as you are taking this profit, the original 5 entries, the original 5 entries that are on top there are still there and are having a floating loss. Let me just bring back this picture so you can see. So we are saying that these 5 entries here are still there, all right? And the reason why you are taking these to tiny profits and taking them to yourself and doing whatever it is that you are doing is because you have analyzed the market, that finally the market will actually turn and overshoot these original positions, and you will still get your profit on the earlier entries that you actually took. So that is one. So number 2, you can actually do the second concept, which is use these additional entries and to bring the dollar cost average down. All right, to bring the dollar cost average down, all right, so that all these entries, whatever entries that you are putting, these additional entries that you are making, all of them are handled together. They are handled together and sold as one block at a better, lower price than originally envisaged. All right. So this is one very important thing that you can do. So you can continue adding more entries to the original 5, and then it will bring the dollar cost average down, and you sell them together as one, and you get your money. Now, the third one is even more interesting. You can actually use these additional profits that you are making to actually close. Let me just, whatever. All right, to close your position at no cost. All right, very powerful. You can actually use this this new profits that you are making. All right, so whenever you make a profit here, whenever you make a profit here, whenever you make a profit here, you use that profit to reduce the exposure that you have. So you don't take the profit, you just reduce your position until you reach a place where you can close out that particular position at no additional cost to yourself. Now that is extremely powerful. Now all these concepts that I've explained here are the complete utopian way of trading. Every trader would wish to have this. First of all, there is no risk in trading in the spot market. Now you are still able to manipulate the market to the extent that you either win or you do not lose money. All right, so you either win or you do not lose the money. All right, remember the first these first two will make you money. This one will make you to win. All right, then this last one here will make you not to lose money. Not to lose money. And that's game shot. Now you are in a scenario where you can enter into the market and you are very sure you cannot lose your money. Now the powerful thing about this particular tool, and let me now come to the next aspect, and that's the flexibility of this particular tool. So you can, all these parameters, whether you are talking about the grid part, the dollar cost part, and the sub-bin, all these can be manipulated, can be changed, and so on. So let me just tell you a little bit now, just before I talk about the flexibility of this particular tool to apply in every scenario in the market, is that Royal Q this particular tool has been there for the last 3 years. All right, that's been there for the last 3 years, and therefore and therefore it has a huge community of users that actually use this particular tool. And these are some of the things that you probably might want to know with respect to it. Number one is that there are more than 1.8 million users that use this particular tool, all right, in more than 200 countries. Now, why is that important? It's important because now you can see there is a huge market that is using this, and they can't be wrong. Why are there many people that are using this particular tool? Because it's a powerful tool. And as a result of it, there are many trainings, a lot of information out here that you can actually use on how to use this particular tool. One of them is this particular channel that you are listening to right now. It is gonna be a powerful channel that you can use to actually get the best way to use this particular tool to apply in your trading. All right. And number two aspect is that these 1.8 million people have been able to make more than $136 million. All right, in these 3 years, they've been able to make in profits. That is huge. And remember, they are making this money when the market has been generally down. All right, crypto, Bitcoin has been down in the last 2 years and so on. And so the fact that this particular tool, people have been able to make money even when the market is coming down is quite significant. But let me now come to what has been made possible. Now there are templates that you can apply and make a lot of income, and especially now that we are getting into this particular space of bull run, of cryptocurrency bull run. So there are templates, all right? There are templates that you can use. There is a template of $15 where you are targeting 3% per trade, and if you repeat these trades 300 times, you will actually grow your account to $100,000. And this you can do either between 2 to 3 years. Now that is very good. All right. So you can start trading with this particular tool for as little as $15. All right. And so there is a template for $15, and you can imagine there is therefore a template for any other amount thereafter, right? There is a specific template for $100. There is a specific tool for $300. There is a specific tool, template for $500, for $700, for $1,000, for $10,000, and so forth and so on. It is endless. People have come up with different structures to be able to use this particular tool. And I will be sharing these particular strategies that can target any amount that you want to trade with, all right? Any amount that you want to trade with. So let me now go to the easier part. How much does it cost? And again, this is very, very nice compared to many other tools that are out here in the market. This is a powerful one that you can actually take advantage of. So there are only two costs that will cost you to acquire this Royal Q tool. So the first one is $120, all right? Annual, and this is annual, all right? Annual subscription. This is a license fee. A license fee, all right? So the license fee is $120 only, all right? It's actually, if you work it out, that's actually $10 per month. I believe this is actually even cheaper than your water bill. is actually cheaper than Netflix. All right. Absolutely. I think Netflix is more than $14 or $15 or thereabout. All right. But this is only $10 per month. You pay it annually. And the beautiful about it is that they only require you to pay it annually, meaning that when you pay now, until next year, a similar time like today is when you will be expected to renew your license. All right. So a whole complete year for you to use the tool, to study the tool. You are under no pressure to pay monthly, to pay next month. Until now, you have only 4 weeks to learn and use the tool with all these complexities and all. You can take your time and actually learn how to use the tool. The next amount is profit share. All right. So every time you make money, you pay you share profit 80-20. All right, 80 to yourself and 20% to the company. So you share profit 80-20, and you need to prepay this. You prepay. All right, you prepay this particular tool, and you can start with as little as $10. Now, the other thing about this prepayment is that it is your money. As long as it is not utilized, you can withdraw it. All right. So maybe you put in there maybe $30 or whatever it is, and you have not utilized it. You have not utilized that $30. You can actually go there and remove it anytime. It's within your control. All right. It's within your control. So it is your money. It's only that whenever you make a profitable trade, 20% of that profit that you make will be reduced on what you have actually deposited on this particular tool. So basically, that's all there is to it. So the 20% that you need to pay, all right, and the 120. That's it. That's all. No other additional cost is there to this particular tool. I can tell you without any fear of contradiction, this is the cheapest tool out there that you can actually trade with. The most important thing that, of course, I just want to mention with this particular tool is that it is not a robot. It is a tool that you yourself uses to trade. All right. And why is that important? Because it gives you complete control on what you are doing. Most of the robots that are out here in the open that many people are actually talking about, you are not in control. One day you are making money, the next day the robot takes off your money and you don't know what to do. All right. But here I'm showing you a tool that you can actually use and achieve the goals that you are looking to be able to achieve by yourself. So let me talk briefly about the affiliate plan that is there. So the affiliate plan, basically, the company has taken this money, the $120 and the 20% profit share. So these are the two things that the company takes. All right. Now, out of this money that the company takes, it pays out $80 out of this, $80 out of this, and it pays out 70% of this 20%. All right, to the network or for affiliates. All right. Now, what they have done is there are 6 categories. 1, 2, 3, 4, 5, 6. So, and they are called 1, 2, 3, 4, 5, and 6. And they are called V1, V2, V3, V4, V6. And I just want to give, this is not a detailed one, I just want to give a rough estimation of what happens here. So, if you are a V6 and you introduce a friend or you refer a friend onto this particular platform, you earn $70 out of the 80. All right. So, and if you are at 5, you earn 60, then 55 when you are 4, then 50 when you are 3, and then 40 when you are 2, and $30 when you are V1. Now, V1 is basically when you join. When you join, you are already a V1. And so whenever you bring in anyone, you get $30. When you bring in somebody, you get $30. You bring in someone, you get $30. Now, indirect, you can earn indirect. All right. If somebody you've brought in brings in somebody else, you can earn from them depending on your level relative to the person who brought that person. All right. So if the person you have brought in is, say, V1, and you are at V6, so when this person is taking their 30, you will take 40 from indirect. All right, from indirect people. Now you can see, so you are earning the difference between you and them. Of course, you must have realized that there is remaining out of this $10 that has not been utilized. So this one is normally given to from level 4 onwards. All right, it is redistributed to level 4s and those who are at level 4 and above to compensate you for people who have caught up with you in rank. All right. Now, the percentage or the 70% is distributed from 20% at level 1 to 60% at level 2, and the remainder 10% to make 70 is actually again redistributed from level 3 onwards for people who have caught up with you in rank. That's a simplistic way of showing this particular affiliate plan. But since I'll have more videos that I'll actually do going forward, I don't want to belabor or to give you too much information right now. But watch out for this particular channel where I'll be shooting many videos on this particular channel going forward. So I will be going into details in some of these particular areas. I just wanted to do a summary of this particular tool and how powerful it is and how you can use it to be able to benefit in the cryptocurrency space. So again, I just want to let you know, if you want to get more information, please get back, go to the description below, and you will have details on how to get started with Royal Q. All right, or get in touch with me, whichever way that you want. You can get in touch with me. The details again are at the description. There is a WhatsApp channel and so many places how you can get through to me. You can also, if you got this particular video from someone else, someone referred you to this particular video, please get back to them and they will guide you on how to get started. Others, without much ado, I want to wish you well. God bless you. See you in the next video. Thank you.